ladies and gentlemen, I'm Joseph Novichkov, Senior Trading Manager with GDM. Welcome to the new year's first outlook. Firstly, starting with Chinese mainland markets, they're finishing 1% up on Tuesday following a survey that is showing a pickup in China's factory activities for December. As we can see from the board, the Shanghai composite index is a little over 1% up, or 32.64 points at 36.28, while of course the Shenzhen composite added 16.84 points, or 0.85%, to trade at 1985. Of course, the Shanghai index had tumbled 12.3%, registering the worst year since 2011. China's manufacturing purchasing managers index rose to 51.9%, compared to 50.9 in November, beating forecasts for 50.7 on the back of increase on demand. Japanese markets were shut to public holiday, with the Nikkei 225 index last down about 0.16%, or 30.7 points at 19,114.1. A holiday in Japan, as we mentioned, made to a thin trade, leaving the dollar steady to the upside around 118.805 to the yen. That's about 0.5% up, or 0.54 to the yen. European markets on Thursday jumped after a good figures from China and Europe, as the pan-European stock 600 index was 0.63%, or 2.3 points up, while of course all sectors and bourses traded in positive ground, as investors are starting the new 2017 in a confident mood after solid manufacturing activity data in Europe and China. On Tuesday morning, we saw data showing French inflation reaching its highest level since May 2014, as French consumer price index rose about 0.8% year-on-year, driven essentially by an increase in energy prices. As we can see, for the rest of major indices in Europe, the FTSE 100 is 52 points up, or 0.7%. DAX barely changed, 4.85 points up, or about 0.04%. The US dollar held quite firmly on Tuesday, as the prospect of rising US interest rates this year kept sentiment bullish. The euro traded down on the dollar, as we can see, at 1.0435, or 0.2%, down from an earlier peak of 1.066 touched during the last week's brief spike. As we can see, also sterling stood down on the dollar at 1.2255, or also 0.2% on the day. After gaining more than 8% in 2016, gold prices extended its strongest run in the new year, as the first day of 2017's trading on Tuesday by technical buying, gold prices went up, but of course pressured on a strong dollar briefly. However, gold prices in Europe were down at 1150.9, or barely changed on the day, after sliding from a daily high of 1158 on stronger dollar. Oil prices also rose in the first trading hours of 2017, buoyed by hopes that the deal between OPEC and non-OPEC members to cut production, which of course kicked in on Sunday, will be effective in draining a global supply glut. US West Texas Intermediate benchmark crude prices were up a little over 1% at $54.30 a barrel. Oh, that's making it about 58 cents up on the day, not from last year's high of 54.5 reached on December 12th. And of course, the most important in the calendar today, we're looking at high volatility news out of the US. The Institute of Supply Management will show business confidence in the US manufacturing sector. That's coming out at 1500s. Stay tuned. I'll see you again tomorrow with more brief news. Thank you for watching. See you next time. Bye-bye.